Milan. Today we will simply do classwork 3 that is adopted from IEB November 2020. The information that follows relates to Spears Limited, extract from the statement of comprehensive income for the year ended 29th of February 2020. They gave us cost of sales. I don't know why they gave us that. And they also gave us interest on loan from PS Bank, which is a question mark, interest on mortgage bond from Hawk Bank that was given to us. That will be our interest expense. But obviously we have to add it with interest on loan from Peace Bank, of which we don't have. Then we have depreciation as a question mark. That means we need to calculate it. And then they gave us, and then they gave us our net income after tax, which is 518,400, and our taxation for the year is 201,600. And we've got interest on mortgage bond, which is 316,250. Okay, so I am going to add the blue ones because I have net income after tax and taxation. So you just add them up to get your profit before tax. Okay, remember profit before tax, when you minus your taxation, it gives you net income, which is your net profit after tax of 518,400. So if you work backwards and you want profit before tax, you will just have to add the two, which is your income tax as well as your profit for the year. Okay. I will go straight to my note number 1, which is reconciliation between profit before tax and cash generated from operations. The first thing that I'm going to put in there will be that profit before taxation amount. As you can tell, I simply added the two amounts, which is 518,400. You add it with 216,000, and that will give you your profit before tax. That will give us 720,000, and I will just leave it like that. Okay, go back to the information booklet. I also have interest on loan, actually from Hawk Bank, which was the one that I was given. And I don't have depreciation. Depreciation was not given to us, and we'll get to depreciation shortly. But that interest on mortgage bond, I would actually put in the interest part under adjustments for open brackets and put that 316,000 was 316,400. No, 316,250. You'll just put it in brackets there, but I'm not going to do it separately. I'm just going to do the whole thing all together. Okay. I will continue reading on the information booklet. Then they gave us inventory, but you will note that with inventory, we were not given inventory for last year. Obviously, I'm only looking at the things that will go to the statement, to your cash generated from operation node. That is the only thing that I'm going to be looking at. I'm just going to be looking at those elements that go to your reconciliation between profit before taxation and cash generated from operation. One of them is inventory. The other one will be debtors control, and the other one will be creditors control. But please note that here I also have sales income tax and sales VAT. Okay, sales VAT will be included as part of trade and other payables, and the debit part will be included as trade and other receivables. But in this case, I'm not given any debtors control, so I'll just continue reading. And they gave us accrued expense, but that relates to interest on loans, so we can't include it under trade and other payables. We've got shareholders for dividends. It doesn't go under trade and other payables. We've got a loan from Peace Bank, which is 100,000. Now, that will help us in calculating interest, okay? Highlight that, we'll get back to it. And realize that this is a new loan from Peace Bank. We didn't have any loan from Peace Bank last year. So it will just highlight it. And then they gave us tangible assets. These are very important, okay? Because I'm not given any depreciation, and I don't see any depreciation rate here. So I'm assuming that I might have to use note number Number three, for me to calculate depreciation, and we'll get to that later. So they gave us cash flows from investing activities section of the cash flow statement for the year ended 29th of February 2020, and they're telling me that they were correctly recorded. Tangible assets purchased is 1,440,000. Disposals of tangible assets at carrying value will be 320,000, of which at the moment is not helping me in calculating depreciation. I will simply continue reading. Oh, and now I like it when they do it this way because they're giving it to you in sections, all right? When they give it to you in sections, then you know that I'm simply working with this section. I need to calculate what I need to calculate. They are telling us that mortgage bond and loans, and they're telling us that a loan was negotiated with Peace Bank and the money was deposited into the business's bank account on the 1st of December 2019. So let's count. If we got this loan on the 1st of December 2019, I'll get to that actually. And then they say to you, the interest on loan from Peace Bank is 15% per annum. Don't underestimate that part, which is per annum. It tells you that your interest is calculated as 15% per year. Okay, now they said to you the first amount is payable on the 1st of March 2020, which is the next financial year, because our financial year ends on the 28th of February 2020. And then they're telling us that Spears Limited also increased the mortgage bond with Hawk Bank on the 1st of February 2020. A bond repayment of 60,000 was made monthly. Obviously, if we want to calculate monthly repayments with respect to the bond, we'll just take that 60,000 multiplied by 12 and we're going to put that. Obviously, we have to subtract the interest portion, and then the capital portion, we are going to put it under loan repayment in our cash flow statement as repayment for the loan. Okay, so it's simply a loan repayment as a matter of fact. So let me just do it quickly. I'm simply going to take the 60,000 times 12. It'll give me 720,000 and minus that 316,250, which is your interest portion. And then it'll give me 403,750. That 403,750 will go to your statement of cash flow as repayment towards the loan. Okay, if that part confuses you, please check one of the videos that has to do with calculating interest expense when interest expense has been capitalized, when interest has been capitalized. Okay, I don't really care that much about Hawk Bank because already I've got interest on that. My number one concern at the moment is that 15%, okay, which relates to Peace Bank. All right. I'm just going to stop right there. I have information about tangible assets. I also have information about interest on loan, which is the part that I was looking for me to be able to complete that top part of your reconciliation between profit before taxation and cash generated from operation. The first element there will be depreciation. So I'm going to start with the first element, okay? Now, when I start with the first element, and my calculations will be as follows. Guys, there is a note like this. This is a summary of your tangible assets note. Okay, it's just that I won't include your cost, I won't include accumulated depreciation. I'm just including the key parts that are important. The first key part that is important will be balance at the beginning of the year at carrying value, which was given to you. Okay, when you go back to the information booklet, and you'll realize that for tangible assets at carrying value, they gave you balance from last year, which is 3,683,600, which was the balance of the tangible assets at the beginning of the year. And they also gave us the balance of the tangible assets at carrying value, that is, at the end of the year, which is 4,700,000. I will start with that balance at the beginning of the year. So I will start with balance at the beginning of the year, which was 3,683,600. And normally I will subtract depreciation for the current year. Remember, these middle parts, go under movements. Your tangible assets purchased is always at cost. Your disposal at carrying value is always at carrying value. You put it in brackets. That's why I'm saying this note, it is simply a summary of your tangible asset note. Okay. As I've explained, the purchase of tangible asset at cost price will be under movements. Disposals of tangible assets at carrying value will be under movements, and depreciation for the current year will also be under movements. But in this case, I was not given depreciation for the current year. That's why I'm going to put that as a question mark. I was, however, given balance at the end of the year at carrying value, which was 4,700,000. And then you just use the reverse operation to calculate depreciation amount that is missing. So when we use the um, reversal or simply reverse operation to calculate our missing value, this is how it works. You will take this value here, you add what has been subtracted, you subtract what has been added. That's the reverse operation. And I'm going to show that to you in brackets right now. So 4,700,000 plus 320,000, and then you minus 1,440,000, and then minus 3,683,600, and that will give us our depreciation amount of 103,600. I will definitely take that to my reconciliation statement. Okay, the reconciliation between profit before taxation and cash generated from operations. So I'll just put it there as depreciation, and the amount will be that 103,600. Done, just like that. Guys, they will always give you ways to calculate what they didn't give you. So always read the information booklet carefully and work out as to how you need to find the value that you need. Like here, I had to work out how to find that depreciation value. Okay, the next item obviously will be interest expense, which is a little bit tricky. I only have 316,250, but I don't have interest from calculated on the loan that we got from Peace Bank. So I will start with putting my financial year. All I know is that from Peace Bank, the beginning of the year, we got the end of the year. The loan from Peace Bank was obtained on the 1st of December. So I've only had it for how many months, which is 100,000. I've had it only for 3 months. Remember, when you calculate interest, interest will be per annum. So all I'm going to do is just to take that 100,000 multiplied by my interest rate, which was 15%, and multiply that by 3/12. It will give me my interest on loan from Peace Bank as 3,750. Now, how do I deal with that? I will take it straight to my reconciliation, your statement, your reconciliation between profit before taxation and cash generated from operation. And you just add that amount with the interest from that we needed to pay to Hawk Bank, which was 316,250. It will give us our interest in total interest expense will be 320,000. You add these two, which is the first method it's the first time I ever used this method. You add these two, they will give you adjustments form, and I will put it on top of that box. So when you take 103,600 plus 320,000, they will give you 423,600. Add that 423,600 with the 720,000, it'll give you operating profit before changes in working capital. Okay, now we're going to work out inventory. I will simply adjust my information booklet